Why is Nike's stock price down? Nike shares plunge after gloomy sales warning. Nike, the global sportswear giant, has seen its stock price take a significant hit recently. But why exactly are Nike shares plunging? Stay with us as we break down the key reasons behind Nike's recent struggles and what it means for investors. Before we start, don't forget to like, subscribe, and hit the bell icon for more financial insights and updates. First, let's look at the big picture. Nike is a household name, synonymous with sports and fashion. However, even industry leaders face challenges. Recently, Nike issued a sales warning that sent shockwaves through the market. But what exactly did they say that caused such a stir? Shares of Nike took a nosedive on Friday after the company lowered its full-year guidance and projected a 10% drop in sales for the current quarter. This announcement cited weak sales in China and fluctuating consumer trends worldwide. The projected first-quarter decrease of 10% was considerably lower than the anticipated 3.2% decline by analysts, according to LSEG. As a result, Nike's stock plummeted by almost 20% in trading on Friday. In its quarterly earnings report, the sneaker company also revised its fiscal 2025 sales projection to a mid-single-digit decrease, in contrast to analyst estimates of a 0.9% increase. Nike had previously expected growth in sales. Additionally, the company revised its first-half sales outlook from a low single-digit decline to a high single-digit downturn. During a call with analysts on Thursday, Nike's finance chief Matthew Friend acknowledged the challenges ahead, stating that achieving a turnaround of this scale would take time. He expressed confidence in the company's efforts to reposition itself for sustainable, profitable, long-term growth through a more balanced product portfolio. Nike attributed its guidance cut to various factors including slower online sales, planned declines in classic footwear lines, increased macro uncertainty in Greater China, and uneven consumer trends across its global markets. The company also expects wholesaler sales to slow down as it introduces new innovations and reduces focus on classic product lines. Despite beating earnings estimates in the fiscal fourth quarter, Nike fell short of revenue expectations. The company reported a net income of $1.5 billion, or 99 cents per share, for the quarter ended May 31st, as compared to $1.03 billion, or 66 cents per share, in the same period a year earlier. However, sales dropped to $12.61 billion, down approximately 2% from $12.83 billion the previous year. In fiscal 2024, Nike recorded flat sales of $51.36 billion compared to the previous year. This marked the slowest pace of annual sales growth for the company since 2010, excluding the impact of the COVID-19 pandemic. Nike executives attributed the sales miss to a range of factors, including a decline in its lifestyle business and insufficient momentum in its performance categories, such as basketball and running shoes. The company's online performance was affected by a higher proportion of lifestyle products, increased promotional activities, and decreased sales of classic franchises. In China, despite a decrease in traffic across all channels starting in April due to macro conditions in the region, Nike's sales exceeded Wall Street expectations, reaching $1.86 billion compared to estimates of $1.79 billion. However, sales in North America, Nike's largest market, were below expectations at $5.28 billion versus an estimated $5.45 billion. Nike reported that its Converse brand had a significant decline in revenue, dropping by 18% to $480 million. This was mainly due to decreased sales in North America and Western Europe. Nike has faced challenges in recent months, with slower revenue growth, criticism for lack of innovation, and a need to adjust its direct sales strategy. The company initially focused on selling through its own channels, rather than through wholesalers like Foot Locker, but later decided to shift back to selling through wholesalers. Nike's direct revenues for the quarter were $5.1 billion, down 8% compared to the previous year, while wholesale revenue increased by 5% to $7.1 billion. Analysts have suggested that Nike's emphasis on direct sales may have diverted attention from innovation, allowing competitors to gain traction. TO addressed this, Nike plans to reduce the number of products available and focus on developing new styles. The company is also banking on new designs in the 2024 Paris Olympics to regain solid ground. CEO John Donahoe mentioned that Nike is accelerating its plans to decrease the supply of classic products, which he expects to impact revenue in fiscal 2025. In addition to internal challenges, Nike has also faced external factors, such as a tough economic environment leading to decreased consumer spending on sneakers. Analysts anticipate a slowdown in the overall athletic category as consumer trends shift towards denim and dressing up. To mitigate these challenges, Nike has been focused on cost-cutting measures. The company announced a restructuring plan to reduce costs by $2 billion over the next 3 years and cut 2% of its workforce to invest in growth areas such as running, the women's category, and the Jordan brand. Nike's stock price drop is a reminder that even industry giants face hurdles. Supply chain issues, rising costs, weakening demand, and stiff competition have all contributed to the recent plunge in Nike shares. However, Nike's resilience and strong brand foundation suggest it has the potential to bounce back. Investors must stay informed and consider both the risks and opportunities when making their decisions. Thank you for watching. Don't forget to like, subscribe, and hit the bell icon for more financial insights and updates.